And Bitcoin surged past gold and tech stocks in April, sparking debate over its role as a refuge from market turmoil. After historic swings in April, an age-old market maxim looms over the bounce in the US stocks: sell in May and go away. One of the best-known market trends, the sell in May effect, is backed by decades of historical performance, and we dive into this trend and the changing narrative about cryptos in this next report. Take a look.
Bitcoin's more than 15% increase in April was driven by investors seeking protection from escalating policy risks and institutional instability. May looks to be another rollercoaster month, with cryptos expected to continue their outperformance, similar to last month. In April, Bitcoin surged past gold and tech stocks alike. Gains in Bitcoin, as digital gold rekindled the debate over whether the largest crypto token serves as a refuge from geopolitical and economic turmoil, such as the strife triggered by sweeping US tariffs. The other go-to refuge in periods of uncertainty, gold, rallied to a record high of $3,500 an ounce before paring some gains to return 6.1% in April. Bitcoin posted over 15% increase since April 1st. Advocates say the OG token acted as an alternative hedge amid growing concerns over US fiscal policy and institutional stability. After Trump took office and started his economic broadsides, the initial reaction to the tariffs saw Bitcoin move lower alongside risk assets, mirroring sharp declines in US stocks. But the crypto soon diverged, rallying sharply as long-dated Treasury yields climbed and investors sought protection from escalating policy risks. Rising concerns about the independence of the Federal Reserve and the credibility of US economic policy have led investors to seek refuge in the Swiss franc, euro, gold, and now, finally, Bitcoin. What stands out more is Bitcoin's unusually low beta during recent market stress, suggesting investors are beginning to view it as a more mature, long-term asset. In April, investors poured about $2.9 billion into US-listed Bitcoin spot exchange-traded funds, ETFs. That marks a sharp reversal from March and February, when the funds saw sharp net outflows. Bitcoin's defensive properties are becoming increasingly relevant. This comes as investors confront a range of risks, from private sector shocks like the collapse of Silicon Valley Bank in 2023 to government sector threats such as political interference in the Fed. In the month of extreme fluctuations in US equity markets, stocks associated with cryptocurrency experienced a significant rise, propelled by the surge in Bitcoin's value. Stocks linked to digital assets tend to be more volatile than the tokens themselves, meaning that value increases are often amplified when prices go up. However, April showed a different side. That trend is set to continue into May, as recession bets are back on the table after the US economy contracted at the start of 2025. Business Bureau, WION, World is One.
For latest news, download the WION app and subscribe to our YouTube channel.